the market seems to be focusing on the loss, but actually what I think is as interesting is your outlook on fares. So my question really is, and we sort of said this in the headline, is this as bad as it gets? And what is your expectation for the fare story going forward?
So can I just correct some of your headlines? I mean, it's not
Absolutely.
a turbulent time. I mean, it is... the market is not surprised. There are no real surprises in the first half loss. 19 out of 21 years, EasyJet has lost money in the winter. Break it down. Easter has moved from the first half into the second. That's phasing. That's £45 million of the loss. And the foreign exchange headwind against us is £80 million. So before we started the first half, the market knew there was a £127 million loss against EasyJet, right? So in the first half, 45 million phasing, 80 million foreign exchange hit. Because of the weakness of the pound against the dollar, we buy our fuel in dollars. That leaves then a very normalised loss for the first half. So it's not turbulent. We're very stable. We're navigating our way through the referendum. We know exactly what we're going to do about that. Our revenue is up. Our passenger numbers are up. The loyalty of our customers is very, very high. 75% of them rebook with us every single year. And actually what we've said for the second half is that we're holding guidance. So we haven't changed guidance for this year. So actually, I think your headlines were quite exaggerated.
OK, the reason we say that the market is surprised is the stock's down 5%. Like, the maths is as simple as you suggest it is. The stock shouldn't be doing what it's doing.
Do you know that? And the stock has gone up 37% in the last 3 months. So and there's not always good reasons for that. Usually, when oil goes up, our stock goes down. The fuel price went up. Our stock will go down, right? Actually, we prefer a high oil price because it shakes weak capacity out of the market. But our share price will always react negatively when fuel goes up. So, you know, yes, there will be some shorts in there. There will be some shorting of the stock today because actually we've had a very good run over the last 3 months. And actually, if you look at our share price, it's fine for where it is today. So we're not concerned about the share price. And I think you've got to see through what's happening and look into the second half. We've announced that we are converting 320s into 321s. The market has really liked that. That is the right thing to like because it means that we can up-gauge. That means that we can really optimise what we do at slot-constrained airports. We have a formidable network, but actually it's very hard to grow when you're in primary airports with those peak slot positions. The 321s allow us to do that. And as I said, you know, they should be very pleased with kind of where we are getting our customers back in to rebook for the summer season. I mean, families have increased their bookings with us 15%. That will be a second half effect. And we've also said that we see an improving RPS trend. So, you know, actually, capacity is coming out of the market even now. If you look at what's happening with other airlines, Alitalia, Air Berlin in financial trouble, Norwegian taking capacity out of Gatwick, Vueling changing their growth from 15% to 2% growth, massive reduction in growth. So actually weak airlines are getting weaker and strong airlines like EasyJet are actually getting stronger. So there are very good reasons for the loss, and I think they've just got to be, and they are well understood by the market.
OK, the reason I talked about the short interest is, and I can show you the chart to our audience, is that it hasn't been this high for really quite some time. And that's why we're highlighting the fact that the short interest is what it is. And that is an indication of the market sentiment towards the stock. But let's talk a little bit about the capacity. You've ordered the NEOs. Did you at any point have a discussion about ordering more of those NEOs? And is there an option in your mind to order more of those NEOs as you take advantage, as you say, of the situation in Italy, Spain, Norwegian coming out of Gatwick in the way that it's, as you discuss?
We don't need to do it. We've got a framework agreement with Airbus where we've already got a lot of NEOs options, so we can have we have optionality on future NEOs, and we have our fleet plan which takes us 21, 22. And as I said, we've converted some of the A320s, but we have got our first NEO coming in June this year. And actually, you know, our growth level over the last 3 to 4 years has been anything between 5% and 9%. And we will just evaluate as we go along. It's 8.5% right now. That is a good growth. We believe we can take advantage of a lot of opportunities, and we are doing so. It's very purposeful. It's very strategic. And actually, we're taking all the right decisions for EasyJet in the future. We're not taking, knee-jerk kind of decisions about strategy.
Carolyn, the reason I asked the question about the optionality and your sort of thoughts around that order is that there had been a lot of speculation that you were going to make this order. We thought it was going to come later, and we thought it was going to be bigger. So my question is, why now why this size?
Okay. Please be really clear. We already have a framework agreement with Airbus where we have firm orders and options. This is not a new order. All we have done is we have converted from our current order 30 A320s, which have 186 seats, to 30 A321s that have 235 seats. And we've phased them over the course of time. So it's a conversion. It is not an incremental order to what we've already got.
If I look at Carolyn Miller here in Berlin, if I look at EasyJet shares, I like to typically look at a 5-year period here. You have outperformed the FTSE All-Share Travel and Leisure Index, EasyJet shares in white, the index in yellow. Ryanair, though, over the last 5 years has done far better, more than tripling here. What do you need? What do you need to do to catch up to that share performance?
So I think just bear in mind that the referendum effect in Britain has disproportionately affected EasyJet because we are sterling denominated and Ryanair are euro denominated. So the sterling effect is quite a big effect, and also I think the uncertainty, the political uncertainty about Britain negotiating with EU 27 weighs more heavily on EasyJet because we are a British airline and Ryanair are a Irish airline. They're a European airline. And that is definitely a factor in the underlying share price. You know, we are very focused on our margins. We're very, very focused on our cost program. Actually, in fact, I think the analysts would have been pleased with the cost performance over the last half. We actually beat expectations there, and we will continue to focus on cost, and we will continue to do what we really do well. I mean, the thing is, you can't be driven by the share price. You have to be driven by what is right for the airline, and the output of that will be a strong share price. And that I think with Brexit and the negotiations coming up, that it's going to be a bumpy road. I mean, the shares have been volatile, and actually for many stocks, they've been very volatile, but particularly for sterling-denominated stocks. And we are one of the very few FTSE companies that are actually sterling-denominated. Most of them are actually global companies.